Hi, we have started interview series for fund accounting jobs, fund accounting, especially hedge fund accounting, private equity accounting, real estate accounting, and crypto accounting as well. So in upcoming time, we'll be hosting sessions on all those areas to help my subscribers or followers or students to understand this complex jargons of fund accounting or fund operations or administration process, because fund admin or fund accounting jobs which are highly growing not only in India but also abroad as well. And that's why we have started the series of sessions. We have already scheduled, and you would say regular sessions on questions and answers. Basically means what type of questions which has been asked to our students, and the expectations of, let's say, fund administration companies like Apex, Citco, Wipro, and all other companies, what sort of questions that you may expect. So you would see like questions and answer series in upcoming time. And with regards to that, today would be our first session where you can attend top 5 to 6 questions and answers in one session. So like what sort of means questions which been asked in the interview. So I'll decode questions as well as answers. So I would request you, if you like this initiative, please do subscribe and share this with all of your maybe close friends or family members or office mates, so let them also understand and upskill themselves, because in upcoming time you would see big boom for fund accounting and reporting, compliance and all other profiles as well. So this is something the initiative which we have taken to help you guys. So I would expect more likes, and again you can share this content with others. All right, so let's start to the session. We'll discuss that. Okay, so here is, you can watch. 321, the notice to call capital of $4 lakhs was sent to a fund's limited partners with the due date of 4/6/21. The effective date of capital, which is again 4/6/21, and on 4/6/21, so it means on a effective date or due date, we have received only $3 lakhs of 4 lakhs was received. So it means 3 lakhs received out of 4 lakhs. All right. So what is the GL entry on 4/6/21 to account for the cash received on this day only, if any? So it means here they are asking us to post journal entry. So understand this. So total capital which was due, which is 4 lakhs, right? Due cap. But actual amount we have received on the date is, which is 3 lakhs. This amount we have received. Cash received. So here scenario is, you have due, it means you have already due is pending in your books of account, and you have received cash amount of rupees 3 lakhs against 4 lakhs. So now here it is asking us to prepare journal entry and to see how we can record this in the books of account. All right. So here if you see see, the answer is, now you can see here the general ledger entry for the cash received on April 6, 2021, using this practical example. So now on GL date, so it means group ledger date, your accounting entry would be cash account debit, which is $3 lakhs, to capital call receivable account credit, which is 3 lakhs you have. And always make sure that we record capital to the liability side. Your capital, again, it's a liability of your fund, because that will have to return to the investor back when they call it back, or maybe on, let's say, agreed distribution date. So we'll have to return that, and that's why we report it to the liability side. Understand this reason as well. Cash account is debited because cash is increased by $3 lakhs. Capital call receivable account is credited to reduce the amount of capital call receivable by $3 lakhs and reflecting the cash received from the limited partner. So as I said, so eventually this 4 lakh amount was due, but out of 4 lakhs we have received 3 lakhs. so that you can apply accounting treatment for 3 lakhs first, and remaining 1 lakh you can as it is keep it on your receivable part, right? So in next question I have covered that. If you see on 321, same example on 321, see the notice to call, my bad. So this one is the same one. So so here the second question is about the same thing. If you see, I have just continued with that. So on 4/12/21, outstanding capital call payment were received by fund totaling of 1 lakh. So it means whatever amount was due, that amount we have received. Then what is the GL entry for the late payment on 4/12/21? So it means here we have received this late payment. See, late payment, it was receivable which was the due, and that due amount which we have received, and if due amount we have received, then your accounting entry would be, in that case, here is your entry. So entry would be on group ledger entry date, cash account debit, to again capital call receivable account credit. So whatever that capital it was due, now you have received entire amount. And why we report this? Cash account is debited because cash is increased by $1 lakh, and capital receivable account is credited to reduce the amount of outstanding capital call receivable by $1 lakh, reflecting the late payments received from the limited partners. So now here in this context, if we just combine these two questions, whatever in a first question we have covered the capital call amount which we have received $3 lakhs, and in second question we have covered the remaining $1 lakh which we have received to us. All right. So now let's discuss the another question we have. Is you can also try to answer on your own. See, here the fund I makes investments in assets. B it means you can say any assets, let's say stocks. All right, by transferring $250,000 in cash to the seller of the asset, what would the GL entry associated with this acquisition be, if any? You can try to answer on your own. So here it seems like it's an investment. Investment, it means investments you can treat as a or purchase, right? And always we record this purchase to the debit side, and when you purchase something, cash will out. So now you can prepare accounting entry. So let's look for an answer. See, same questions which was asked, and it's important for you as well to try to understand that in details. So in this context, see this transferring 2,50,000 in cash to the seller. So in the books of buyer or your fund, your accounting entry would be assets account debit, which is 2,50,000 to cash account credit. Sometimes assets will record it as a cost of assets. Cost of assets and assets both are same, so we'll record it as a cost of assets account debit, because assets we have received it, and whatever things that you received, you can report it to the debit side, and cash which has been out. If the cash which has been out, in that case, we can record that cash to the credit side, because increase and decrease rule also here you can apply it. So as an explanation, you can see asset B account is debited to the record. The increase in the value of an assets acquired, in this case asset B for 2,50,000, and cash which is account is credited because cash is decreased by 2,50,000 as it is being used to purchase the assets. All right, so note down this answer as well. So otherwise I'll share this PPT as well in the link so that you can go through it. So because here we will discuss about top 5 to 6 questions. So remaining questions will continue to discuss in our coming sessions. All right. The next question is question number 4. Fund I received a return of capital from assets A for $1 lakh in cash on 420. So what would be the GL entry for in this case? See, first, whenever you would see such a questions, always try to understand what is included in the statement. One is cash portion, cash that we treat as an asset. All right. Second, here we have is we're talking about assets. Assets, it means we have sold it. If you have received assets, it means we have sold out assets. So here we have two accounts, and assets, when you sold it, always be recorded with the credit side. And if cash comes in, then we record it with the debit side. So let's discuss that. Is it the case or any other case? So let's look for an answer. So here we have reported accounting entry on group ledger date is cash account debit, which is $1 lakh to investment in assets, or cost of investments also you can include. Cost of investments or assets. Account credit. Why? Because cash account is debited because cash is increased by $1 lakh, and in investments in assets A account is credited to decrease the value of the investments by $1 lakh, reflecting the return of capital received from asset A. So I hope now you got this, why we have prepared this entry. We have treated just sell off investments in a transaction. All right, so let's discuss another question. So another question is here, fund I receive return of capital. We have discussed this, I believe. See, the next question is, fund I received a distribution from income from asset A for $26,000 in cash on 6/21. What would be the GL entry for this transactions? So here in this case, we have received cash, but same cash we have received as an income. See, when you receive any cash, that always we record debit, and when you receive any transaction as income to you, that we record to the credit side. So now you have a credit and debit side. So let's discuss that, how we post accounting entry in this context. Here is your answer. Cash which you have received, cash account debit, which is $26,000, and income distribution, which is income you have received it. Why you have posted this entry? Cash account is debited because cash is increased by $26,000, and income distribution account, which is credited to record the distribution of income received from asset A. So totaling which is $26,000. So whenever you received any income, we record in this way only, because income always we record with the credit side. All right. So the next question is here. Another question is, fund I records management fees of $9,000 on 5/30, which is date, which will be paid on 7/1. So what would be the GL entry for the transaction recorded on 5/30? So here basically we have two different things. One is management fees, all right, so which is expense, all right, and second one is we have recorded. If you see the date, see that amount it will pay in future, 7/1, which is a future date. Future date. And if you see, if you are recording any expense in the books of account with the commitment of that you will make payment of that expense in future, so that expense will treat as an accrued expense. Accrued expense, and accrued expense it will be like liability for. Now see, liability always we record with the credit side. So now we'll record, and expenses always we record with the debit side. All right. So expenses we record with the debit side. So let's discuss that. So here we have recorded management fees. Management fees expense account debit to accrued management fees payable account credit, because Payable always we treat as a liability. So management fees expense account is debited to recognize the expenses of 9,000 for the management fees incurred by Fund 1. All right. And accrued management fees payable account is credited to reflect the liability which is created for the management fees that will be paid on July. So this fees will be paid in July. But from accounting perspective, we have calculated, measured and recorded that expenses in the books of account. I hope you got this, how we reported. All right. So the another question is here on 620, we learned that fund investment in asset B has increased in value from 1,50,000 to 2 lakhs dollars. See here the scenario is little different. So the cost of asset is $1,50,000. All right, and on accounting date, investment value is which is something around 2 lakhs USD. So here I can see appreciation in assets, which is by 50,000. So here this gain you can treat as unrealized gain on. All right. So there are two accounts. Then one is assets account and another one is gain account. So gain account we recorded to the credit side. Cost of assets we record to the debit side. So let's discuss that accounting entry. What would be the entry? So here we have entry which is investments in assets B or cost of assets which is 50,000 means which is the main difference, and then unrealized gain on investments account credit because unrealized gain we treat as income. So we have 50,000 USD which is income that we report it out. So why we report this? Investment in assets B account is debited to increase the value of the investments by $50,000, reflecting the appreciation in the value of asset B. And second thing about unrealized gain is that account is credited to recognize the unrealized gain of $50,000 resulting from the increase in the investments value. All right. So this is how we have discussed around top 7 journal entries. So remaining that we will discuss means we have incorporated around 200 plus different questions which was asked in the in last couple of interviews. So that all questions and their answers will discuss in this series. So I would request you just be there and attend this series and enhance or upskill your accounting, basically fund accounting knowledge. All right. So anyways, if you are interested in our personal facilitation mentorship or dedicated training courses, you can reach out to us. We'll help you to upskill your knowledge. Hi, how was the session? Did you like it? If yes, then don't forget to click on subscribe button and bell icon button because this will help you to get notifications when we upload latest video. So yes, if you're looking for any private mentorship or trainings or customized trainings, and also I would request you can reach out to my website and see their courses, because list of courses we have uploaded, means recorded live, and even one-on-one consultations with industry experts as well. If you're looking for that, then check the link which I have already provided in description below. So click on that link, book your sessions or courses or whatever that you're looking for, and enjoy your learning. Thank you very much. We'll see you in next episode.